This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market stocks were on track for their steepest one-day fall in 2 weeks. MSCI's index of developing world stocks dropped about 1.2% on the day, as we saw investors renew their worries about global trade, with of course no immediate signs of a concrete US deal with China. Now on the continent, skepticism over that trade war agreement also fueled a 1% drop at South Africa's JSE. Also, we saw market heavyweight Naspers losing about 2% on the day, in line with losses of its Hong Kong listed associate Tencent. Now also coming up on the show today, South Africa's power utility seeks a $7 billion bailout from the government. Uganda's central bank leaves lending rates unchanged at 10%. And the White House plans an end to subsidies on electric cars and renewables. Well, let's start off the show in South Africa. The country's struggling state-run power firm, Eskom, wants the government to take on about $7 billion of its debt as part of a turnaround plan. Now, the power utility is struggling to emerge from a financial crisis marked by declining electricity sales, ballooning debt, and liquidity problems. Speaking at a news conference last week, Eskom's chairman, Jabu Mabuza, told reporters that asset sales could not solve the firm's problems. He also suggested a bailout or debt relief plan were preferable options. Now, the utility projected to make a loss before tax of more than $814 million this financial year. Well, Angelo Coppola now joins us in Johannesburg to discuss this further. Angelo, welcome to the show. Now, despite what Eskom wants, Angelo, Finance Minister Tito Mboweni, he just reiterated at the G20 summit that the government is not keen on a bailout of Eskom. He says actually the firm should go to the market and raise money. So does it look like the firm will be getting financial help on this turnaround plan from the government?
Well, look, in that same interview on the sidelines of the G20 summit, Mboweni also said that there's a limit to what they can do, but nevertheless, in his words, they had provided guarantees. The question is whether the state will increase the current guarantee limit. We understand from last week's press conference that around 24 billion of a 25 billion guarantee had already been allocated. Meanwhile, some Eskom executives are on an investment roadshow at the moment, gauging interest from institutional investors in Europe and in the States. It's unclear if this is a book-building exercise or a marketing visit. You'll recall, of course, that in August, the utility did raise around $1 billion in euro bonds. But a lot has changed since then. Last week, Mabuza also told us that there was an issue, and he hadn't spoken to Mbeki or Mboweni at that stage, but he did mention those two options, debt relief or an equity injection. So will the state help Eskom again? Well, they don't really have a choice. The country needs electricity to grow its economy.
Well, the reality, Angelo, is the future of Eskom is at stake. We know it has reinstituted daily blackouts since November 29th, certainly to avert a total collapse of its grid. It's also been clear that it needs more help to survive, more financial help, with, of course, its debt burden that's impossibly high. So what is the outlook for the firm at this stage?
Well, the outlook doesn't look very bright at the moment. We anticipate blackouts for the rest of December. There's also the optics around government debt relief and any future capital raising activities that the utility will probably pursue. Institutional investors may be a little tired of hearing about plans and turnaround plans and no action. The current management team have been in place for around 9 months now, and they haven't got a lot to show for itself. The turnaround plan is late. Corruption is being worked on, but it's hamstrung concerning its operational challenges. Equipment's breaking, coal stockpiles are down, and any unplanned breakdowns in those pieces of equipment immediately lead to blackouts. So it's got to spend a huge amount of, well, in fact, it is is spending a huge amount of money on gas and diesel to keep those open cycle plants running, but at some point that budget is going to be more than a little stretched. And this in a low demand economy. The only light at the end of this tunnel is that the economy is going into shutdown mode for the December holidays, which may give Eskom an opportunity to fix some of that equipment. Uche?
Well, give us a sense, Angelo, of how much of an impact Eskom's troubles are having on the overall economy, and certainly President Ramaphosa's plan to revive growth in the country.
Well, look, it's not something that Ramaphosa would have factored into his plans. Eskom's woes, as far as we're concerned, weren't as apparent in September as they are now. There were just 3 blackouts prior to these 5 episodes that we've experienced in the last 6 or 7 days or so. We talked about confidence levels before and how important they are in attracting investors. If there isn't any level of confidence in consistent power supply, investors are going to look elsewhere, and that's the sad reality. And given the nature and depth of the maintenance issues that are being faced by Eskom, it's not going to be fixed anytime soon. However, an analyst I spoke to suggested that it's not all doom and gloom. There are solutions, but it's going to take some political will. For example, reworking the business model for renewable energy. It's an obvious starting point, I'm told. Money has to be spent on maintenance and it has to be done quickly. And he's suggesting that private-public sector partnerships have to be developed to solve the grid and the power station challenges that Eskom is currently facing.
Well, many thanks for that update, Angelo. Angelo Coppola joining us there in Johannesburg. Let's move on now to Uganda, where the central bank has left its key benchmark lending rate unchanged at around 10% for December. Now, the bank's governor says the decision is based on an anticipated pickup in domestic economic activity in the coming financial year. Here's CGTN's Michael Baleke with more.
The Bank of Uganda governor says strong economic performance in the first 10 months of 2018 indicates that growth could even be better in 2019.
The strong economic growth is in part supported by the accommodative monetary policy stance and the associated rebound in private sector extension.
The latest government data indicates the economy grew between 7% and 8% this year, better than the projected 6%. Economists attribute the growth to improved harvests and stable inflation caused by the resulting lower food prices. Public infrastructure investments, according to Bank of Uganda, are also driving economic activity. But the central bank warns there could be risks to Uganda's strong growth down the road. Some of the risks include unpredictable weather conditions, which could affect agricultural productivity, but also the slow execution of public investment projects largely financed using borrowed money. Some economists worry Uganda and other countries are channeling their limited resources to infrastructure projects that may be slow to generate economic benefits.
Economic transformation, poverty reduction is not simply going to arise by the fact that we have paved roads and have hydropower generating dams.
But the Bank of Uganda maintains that it has assessed the risks and uncertainties, and it says it plans to push ahead with its current monetary policy position. Michael Baleke, CGTN, Kampala, Uganda.
Now, Kenya is considering issuing shilling-denominated bonds in foreign markets in order to reduce its foreign currency exposure. The East African nation has over $50 billion in public debt, more than double what it had at the end of the 2012-2013 fiscal year. Now, debt service costs have also risen from about $2.5 million in 2013 to $4.48 million annually in 2017. About half of Kenya's total debt is due to foreign creditors, and the country is increasingly reliant on dollar-denominated commercial debt.
We need to find a mechanism on how we can actually have domestic denominated currency. And I know we've been working with the IFC, African Development Bank, to see how we can actually borrow, like what India has done in the Masala bonds. We are saying borrow concessional, but where is the money? We don't have enough concessional loans, and yet we need to fix our infrastructure at the same time. So we need to provide these solutions for us really to actually address the problem concretely.
Now, the rapid accumulation of debt prompted the IMF to raise the risk of a debt distress for Kenya from low to moderate. Amongst other notes, Kenya has a $750 million Eurobond due to mature in 2019. That's part of the $8 billion in debt payments due in the course of the fiscal year. Of course, it will conduct a roadshow for more debt issues in the first quarter of 2019. That's according to the Treasury Principal Secretary Kamau Thuge. Now, the structure, tenor and pricing of those bonds is yet to be determined. Let's head to Zimbabwe now. The country will now allow 2 more private companies to explore and mine diamonds in the country. This brings the number of private firms that will operate in the sector to about 4. While making the announcement via social media, Mines Minister Winston Chitando said that any company or person with title for diamonds will have to go into partnership with the 4 companies. However, he did not mention the firms. Now, back in early 2016, former President Robert Mugabe's government evicted all diamond mining firms, including 2 Chinese joint venture companies, saying their licenses had expired after they declined to merge under the state-owned mining firm. And still in Zimbabwe, one of the country's leading millers, National Foods, could become the biggest casualty of a US dollar shortage in the country. Now, the company intends to shut down its factories in Harare and Bulawayo due to lack of foreign currency. Here's CGTN's Farai Mwakutuya with more.
By the close of business today, the mills inside that factory may shut down and the people operating them be out of work until the foreign currency crisis afflicting this country improves. And that may take a long time. National Foods says it hasn't received enough foreign currency to pay off international wheat suppliers who've now cut off its credit. The central bank, which allocates scarce foreign currency, prioritizes fuel and energy imports, leaving other sectors unable to procure raw materials or falling behind on payments, a situation that's now caught up with National Foods. The shutdown, should it go ahead, will worsen erratic supplies of bread and other confectionery items and dent the country's reindustrialization plans. The umbrella body for grain millers had previously warned that its members face ruin unless payments for wheat imports improves. Zimbabwe grows less than half of its wheat requirements and spends about $45 million per quarter on international supplies. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Now a look at our corporate headlines today. Vivo Energy Kenya has today launched a convenience retailing offer at a Shell Lavington service station. Apart from a fully fledged service station, the location will house several reputable entities, providing both motorists and shoppers the opportunity to experience all-around quality services at the service station. Now, this include NIC Bank, an NIC Bank branch, a Java House, a KFC, White Rose Dry Cleaners, Safe Dose Pharmacy, and a Welcome Shop. Meanwhile, on the international front, Volkswagen's chief executive says that it's in its deepening alliance with Ford that it might use the U.S. automaker's plans to build cars. Now, VW CEO Herbert Diess said that the company is also considering to build a second car plant in a bid to strengthen the American automotive industry. Diess said VW planned to talk more about the Ford alliance in January. And Kenya Airways has postponed the launch of its direct flight from Nairobi's Jomo Kenyatta Airport to the Somali capital of Mogadishu indefinitely. Kenyan Airways CEO Sebastian Miko said the Kenyan carrier is still facing a delay in getting additional operational requirements to fly on the route. The delay comes at a time when the 3 East African countries have refused to allow KQ to use its Bombardier planes to operate scheduled flights in their capitals, causing diplomatic tension. In Europe, Airbus is teaming up with a new U.S. partner, Lockheed Martin. Now, this is in a bid to try to crack the U.S. military air tanker market, nearly 8 years after losing out to rival Boeing. The agreement marks Airbus's first major foray into the huge U.S. military market since it failed a 2012 bid to merge with Britain's BAE Systems and its large U.S. unit. And that's a look at our corporate headlines. We're heading into a short break now, still coming up on the show. South Africa's pension fund is forced to write off $385 million worth of investments. And Nigeria's central bank opts for an outside court settlement with MTN over the $8.1 billion profit repatriation saga.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business. Only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN. Welcome back. Now, South Africa's National Pension Fund, that's in control of the savings of government employees, had to write off two controversial investments at a whopping cost of $385 million. The fund's investment of $312 million in Steinhoff's Lancaster has been rendered pretty much worthless, and that's after the retailer's value decreased by $14.5 billion. The fund also had to write off about $72.6 million worth of investments and loans with companies controlled by Iqbal Serve. Now, according to an annual report by the fund, a total of $27.2 million was also invested with VBS Mutual Bank, which we know was brought to its knees thanks to corruption. Well, on that note, let's turn our attention to Kenya's rapidly growing pension fund industry. To discuss this, we are joined by Simon Wafubwa. He is the founder and CEO of N-Wealth Financial Services. You're very welcome to the show, sir.
Thank you, Uche.
Well, let's turn our attention to Kenya's pension fund industry. We've seen the sector, it's expanded rapidly in recent years. The asset base estimated at over $10 billion US. Now, majority of its assets are invested in equities and, of course, fixed income securities, mostly government bonds. But it hasn't been the best year for equities so far. We've seen the NSE 20 down 1,000 points so far this year. So what's your take on the sector's performance so far this year?
Maybe just to backtrack a bit, 2018 was quite a good year in terms of performance in equities. The composite performance in Kenya shilling returns was 18% for pension funds. And I think it was one of the best in the region. This year, obviously, with the downside of the equity market, presents a great opportunity in terms of a buy market. And obviously, every now and then, contributions are coming in, and this is going to probably position better performance into the future for pension funds. What we've seen a lot of fund managers doing is to realign the portfolios, sizing the opportunities of the undervaluations on various counters that we see. Yeah.
Mm-hmm. But we're also seeing a number of them shifting focus. They're now looking at alternative asset classes, such as large infrastructure and housing projects in the country. How are we seeing players in the market diversifying their portfolios and certainly in order to maximize that value for their members?
We are seeing a gradual uptake of, especially on the infrastructure. And what we have seen the regulator working hand in hand with the government is to put in place a supportive policy framework and also a legislative environment. I am aware the World Bank has been working with the Retirement Benefits Authority to have in place a legislative framework that supports pension funds to fund infrastructure projects. I think it's a very exciting opportunity, because if you look at the gap in terms of infrastructure development, we still have a lot to do. And obviously this is a backbone. Infrastructure is one of the key backbones for sustainable economic growth and development. But Africa as a continent, largely we are limited by capital challenges, and that's why we have a lot of over-reliance into foreign borrowing. By tapping into the 11 billion thereabout USD industry, I think we are likely to reduce over-dependence into foreign borrowing, and this then is going to spur economic growth.
Well, let's talk about the regulator, the Retirement Benefits Authority. It actually says it's working on a bunch of new policies for the sector, one of them which includes risk management, greater risk management, greater transparency as well in the sector. What for you have been the major policy changes we've seen from the regulator, and how has it impacted the local pension industry?
I think we are in a very dynamic ecosystem in which then the pension funds, social security, not only even just in Kenya, but in the context of the East Africa and Africa at large. And this is purely driven by the politics, the changes in the economic demographic, population demographic, technology, the legislative environment. The world is increasingly a global village. And you realize all this then poses risks that requires policy formulators in the space of social security to adapt to them. So one of the very fundamental policy changes is the requirement for certification by pension fund trustees, which then of course enhances the level of efficacy in the overall framework of governance and management and stewardship of the pension funds that they look after. So at the moment, our Kenyan regulator will require every trustee to go through some form of certification, and the curricula will entail looking at how do you invest, your duties as per the law as a trustee, and also procurement issues of service providers, and basics about pension designs, how they are managed, and governance at large. I think the impact is huge, because then the quality of decisions that have lifelong impact on the members of pension schemes is huge.
Well, unfortunately, we have to leave it there. We've run out of time. But many thanks for joining us in the studio. Thank you so much for your update on the industry. Of course, that was Simon Wafubwa. He is the founder and CEO of N-Wealth Financial Services here in Kenya and in Uganda as well. Well, let's move on now. Today marks 5 years since the iconic Nelson Mandela bid a farewell to the world. The famous South African statesman died in Johannesburg in 2013 at the age of 95. Now, even in death, Mandela remains the great hero that helped bring freedom to South Africa. Thousands of tourists still flock to the famous Vilkazi Street in Soweto to see where Madiba and his family lived before he was incarcerated for 27 years. While Sumitra Naidu tells us more about how business is still benefiting from Mandela's legacy.
For tourists wanting to get the authentic Soweto experience, it doesn't get better than Vilkazi Street. The street is just about half a kilometre long and was not only home to Nelson Mandela, but also to fellow Nobel laureate Archbishop Emeritus Desmond Tutu. It's a must-stop for thousands of tourists that visit Johannesburg every year. Businesses in the street and surrounds have grown over the years. Sekumzi restaurant was established back in 2001.
I saw that I'm next to the Archbishop. I saw I'm in the famous street where Mandela is, famous street where Hector Peterson was shot in the 1976 uprisings. Then I said, no, let me start this. Mandela was a real champion. Even now, people still flock in to remember that he passed away, and on that week, more people want to go and visit Mandela Museum, and they end up coming to visit us at Sekumzi restaurant.
It's not only the formal establishments that have thriving businesses in the street. There are quite a few vendors here that offer a wide selection of little items of memorabilia that's easy to take back home. But competition is creeping in.
In a way, it's not like I could say I chose Vilakazi. Probably Vilakazi chose me. So in t-shirts, we have Mandela prints, we have Winnie Mandela's prints, we have a lot of these South African icons. I would say now the business is like, decreasing. Why? Because there's more stalls coming in. And the more stalls come in, is the more even, the money goes down. Why? Because these guys that come in, they only stock and sell. What helps us to still be standing here today is because of the products that we sell. We make them ourselves.
These days, business does not go as well as it used to when I was the only woven basket seller on the street. Back then, I knew I could take home over $360 daily. My dream was that handmade crafts from across all South African cultures could be exhibited here for tourists to purchase, because these are items that we take great pride in. But instead, most people buy mass-produced things and we end up benefiting nothing.
Vilakazi Street boasts a rich history, and it appears many will continue to benefit greatly from it being home to one of Africa's most beloved sons. Sumitra Nadu, CGTN, Soweto, South Africa.
Well, let's go to Nigeria now, where the central bank has agreed to try and settle out of court a dispute with South Africa's multinational mobile telecoms firm, MTN. It has accused the firm of improper repatriation of billions of dollars of profits from Nigeria. Well, CGTN's Philly Haza reports from the nation's capital. Abuja.
Nigeria's Apex Bank and MTN Nigerian Communications Limited reached this decision at a sit-in in the Federal High Court in Lagos, southwest Nigeria. Nigeria is MTN's biggest subscriber base in Africa, with over 50 million customers generating a third of the company's annual profit. But relations have soured since the South African telecom giant opened a branch in Nigeria in 2001, costing the company nearly $3 billion in value. In August 2018, Nigeria's central bank alleged that $8.1 billion in dividends earned from between 2007 and 2015 had been illegally moved abroad by MTN and requested that all of it be returned to the country. MTN denied the allegations and filed a suit to challenge the directive, but Chief Executive Officer of MTN Group, Rob Shutter, gave a hint about the possible out-of-court settlement with the central bank in November. And according to the legal counsels of both parties, negotiations are already in advanced stage. As a result, the presiding Justice Saliu Saidu has asked for a report on the settlement to be produced when the court resumes its sitting on December 12th. Phil Lehaza, CGTN, Abuja, Nigeria.
Now, the World Bank has announced that it is loaning Egypt $1 billion to support the country's private sector and create new jobs in the country. Now, the new program will build on a series of annual loans totaling to about $3.15 billion that we saw the bank issue from 2015 to 2017, which of course is meant to support Egypt's economic reforms. The new financing program is designed to encourage small businesses, Egypt's biggest source of jobs, while improving government performance and promoting local development. Egypt has pushed ahead with a series of economic reforms tied to a $12 billion IMF loan. The program is aimed at reviving the economy and plugging a budget deficit, which included value-added tax as well as subsidy cuts. And let's move to Gambia now. The country's tourism sector is experiencing a new reawakening. Thousands of European tourists are flocking to the smiling coast of Africa as the nation intensifies its efforts to secure new markets. Take a look.
December is peak season for tourists in the Gambia. Most of them head to beach resorts in Banjul, the country's capital.
And it's with a short flight. We used to go to other countries where the sun is shining in December, and now this is the first time we are here. We've heard from many people who come to Gambia that they like it here, that they come here every year, so that's what we want to experience now ourselves.
By the end of its 2017-2018 season, the country hopes its combined attractions of sun and sand, coupled with the local cultural sites, will have drawn in over 200,000 tourists, its highest number ever in a season. But it hasn't always been this way. In the last 2 years, the country's tourism sector has suffered a slump. An Ebola outbreak in the neighboring countries and a political standoff as the country's former president tried to cling to power both had a jarring effect on the sector. Tour companies advised tourists to stay away. But with a new president in place, things are changing.
The friendly weather and scenic beaches are certainly attractions that draw in tourists to the Gambia. But the tourists say they now have another reason to choose this destination. The political stability means they feel safe here.
The sector is now coming back to life. Most of the 45 main tourist hotels in Banjul are full. The tourism sector is estimated to contribute to about 20% of the Gambia's GDP. In order to increase its earnings, the government is now looking for new markets.
We have realized the potentials of Chinese tourists to the Gambia. Because we've been to China twice in 2018 and my minister has gone there. And we know for sure and for fact that the Chinese outbound market is huge, particularly for destination Africa, where the Gambia has a good market share. What we want to do is to concentrate and intensify a good marketing and promotional approach in China.
With sustained efforts, the government hopes in time to turn Africa's smallest country on land into a powerful player in the global tourism circuit. Wilkison Yabo, CGTN, The Gambia.
You're watching Global Business Africa. Let's take a quick break now. Still coming up. The White House plans an end to subsidies on electric cars and renewables. And the Bank of England Governor Mark Carney defends the central bank's hard Brexit warnings in Parliament.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories, are the stories that need to be told. Africa Live. Find your voice.
Just about half past the hour, let's recap today's headlines. The latest global terrorism index shows that terror activities in 5 African countries rose sharply in 2017. Now, according to the study, terrorism deaths decreased globally by 27%, but Africa remains heavily impacted by terrorism. Now, Egypt and Somalia saw the largest increases in terrorism-related deaths. The Middle East, North Africa and Sub-Saharan Africa were the most impacted by terrorism in 2017. Meanwhile, protests rooted in ethnic violence have continued for a third day in parts of Ethiopia's Oromia region. People have taken to the streets in Burayu near Addis Ababa, as well as in the west of the country. The government says it's doing its best to protect citizens and avoid further destruction of property. Authorities have arrested at least 200 people so far. And the United States has renewed its permanent diplomatic mission in Somalia. This comes nearly 30 years after the U.S. Embassy was closed in the Horn of Africa country. In a statement, the U.S. State Department says this historic event reflects Somalia's progress in recent years and is another step forward in formalizing U.S. diplomatic engagement in Mogadishu. And former U.S. President George H.W. Bush will get a national farewell at Washington National Cathedral. Bush's casket has been lying in state at the U.S. Capitol. The state funeral is steeped in tradition, and Bush's casket sits atop the same black-shrouded bier on which Abraham Lincoln and almost a dozen other presidents rested after their passing. Now, Bush is wearing socks adorned with planes flying in formation, a nod to his service in World War II, when he, of course, was shot down while flying a torpedo bomber in the Western Pacific. Now, the White House economic advisor Larry Kudlow says that the Trump administration wants to end subsidies for electric cars and other items, including renewable energy sources. After General Motors announced U.S. plant closings as well as layoffs last week, Kudlow pointed to the $2,500 to $7,500 tax credit for consumers who buy plug-in electric vehicles, including those made by GM under federal law. Now, the tax credits are capped by Congress at 200,000 vehicles per manufacturer, after which the subsidy phases out. GM has said it expects to hit the threshold by the end of 2018, which means under the current law, its tax credit scheme will end in 2020. Now, Tesla, on the other hand, said in July it had hit the threshold, but other automakers may not hit the cap for several years. Well, Daniel Ringes now joins us in Washington to discuss this further. Welcome to the show, Daniel. Now, given that we've seen the Democrats will take control of the U.S. House in January, how much of a chance does Trump's plan to end subsidies for electric cars and renewables have going forward?
I think this is largely a political statement for the fact that there seems to be not that much desire by the Republicans to push through some kind of new law into Congress in the remaining days that they have before the Democrats take control of the House. And it's in the House and the Senate that really these credits are decided. They're written into law. Anything to do with spending is not to do with the president. The president only has the power to refuse to sign a law. And, you know, the Democrats have been generally very pro-subsidies, and it looks even as if some Republicans may support an extension of car subsidies for these, you know, all-electric cars. Solar and wind power, there's more debate, there's more uncertainty. But as I say, there's not that much political capital for either side to make a big deal of this. And even some Republicans sort of see some of the benefits to their own communities, the manufacturing sector and service sector, in promoting these different kinds of renewable energies.
Now, Daniel, we know German car executives, they met with the director of the U.S. National Economic Council, of course, Larry Kudlow, this week, over their concerns about the impact of the ongoing trade war. What do we know about the outcome of that meeting?
Yeah, we had some really high-level leadership from Daimler, VW and BMW come to the White House, meeting with some of the president's top advisors. And we've also had word that these leaders had a conversation with President Trump himself, but there's certainly not a lot of detail. It may well be that the president is distracted by his own legal worries. And on the trades front, certainly I think China has been in the headlines. He's been tweeting about that vociferously over the last couple of days as markets have tanked. So what's likely to have come out of all of this? Well, I think they will have made the case that as three of Germany's biggest car makers with a huge market share here in the United States, they've made over the years significant investments damaging to their businesses, that they will nonetheless continue to invest, and that no steps should be taken, as has been threatened, to impose a further 25% tariff on imported cars here into the United States, which many people think would have a huge damaging effect not only on the German industry but on the US industry, and in the form of rather retaliatory tariffs. So I think, you know, tariffs have been threatened, but I certainly think there's a sort of sense of a truce between the US and Europe at the moment as the drama plays itself out between the US and China.
Quite right. Well, let's shift focus just a little. Now, as we're watching world leaders scrambling to rescue that Paris climate deal at COP24, which of course we know agreed to shift away from fossil fuels, we're watching Trump also hosting, plans to host actually a fossil fuel a meeting with fossil fuel executives. He plans to promote fossil fuel technologies, especially in industries such going both at home. How do you see it going both at home and certainly at the COP24 meeting?
Well, environmentalists here and at the COP24 meeting obviously see the decision to host energy industry executives from the coal and natural gas and nuclear industries to promote technologies that they believe will improve the energy efficiency and decrease the harmful gases emitted by these, as a highly provocative way of really thumbing the nose at the whole notion of this climate movement begun in its latest iteration with the 2015 Paris Climate Agreement that President Trump pulled out of. Many of his own officials have cast doubt on their own scientific data that recently was delivered that issued some pretty stark warnings. This is more of the same. It's got to be seen within a political context. And the fact of the matter is President Trump made it one of his key pillars to promote the coal industry, which is still a substantial part of the energy mix here in the United States, but is certainly not as efficient as natural gas. And so, you know, within that context, I think we can see this as a political move.
Well, many thanks as usual, Daniel, for your insights. Daniel Ringes joining us there in Washington, D.C. Now let's move on to the latest on Brexit. British lawmakers have delivered a huge legal blow to Prime Minister Theresa May. They found her government in contempt over its refusal to publish key legal advice on Brexit. Now that historic vote comes during a huge debate on Brexit in Parliament. CGTN's Richard Bestick is in London with more on the high drama.
It's day one, but the Brexit agreement deal has already been the trigger for huge parliamentary drama. There's 5 days of debate ahead, but MPs in an unprecedented vote have already found the government guilty of contempt of Parliament for refusing to make public the legal advice it's been given.
The ayes to the right, 311.
The contrite government has now promised to release it, but it's an indication that Parliament's not giving the government an inch, and the level of trust couldn't be more threadbare. From the outset of the debate, Prime Minister Theresa May was again pressing reluctant MPs to accept the deal on the terms of Britain's withdrawal from the European Union.
What it would say about the state of our democracy if the biggest vote in our history were to be rerun because a majority in this House didn't like the outcome. And what it would do to that democracy and what forces it would unleash. This House voted to give the decision to the British people. This House promised we would honour their decision. If we betray that promise, how can we expect them to trust us again?
Consistently, opinion polls have shown that Britain is pretty much divided right down the middle by Brexit. Trouble is, Parliament can't make up its mind either. The people in Parliament are united in their mutual and deep-seated mistrust of Theresa May's plan. She has now just a matter of days to save it. It's got to be said, though, it'll be an uphill struggle. Should she lose the vote, Britain will be thrown into an unprecedented political and diplomatic crisis, which could bring down the Prime Minister, her government, and even trigger a second Brexit referendum. The country's Brexit plans will be thrown into chaos. Richard Bestick, CGTN, London.
Meanwhile, Bank of England Governor Mark Carney defended the central bank's hard Brexit warnings at a hearing in Parliament. The BOE said last week that under a worst-case scenario, Britain could suffer an even bigger hit to its economy than during the global financial crisis. Now, Carney divulged that the projection only aimed to prepare banks and other lenders for the worst case possible, and that it's not an off-the-cuff forecast. Now, some pro-Brexit critics dismissed that report as scaremongering. Carney stressed the worst-case scenarios were, quote, low-probability events in the context of Brexit.
Tail risk is tail risk, so it's low probability that all of these events would happen at the same time. So because it is not just a question of the formal trade barriers that come into play, tariffs, product standards, rules of origin, those, but also shorter term disruptions in terms of port infrastructure, other logistical disruptions, but also a fairly severe financial market reaction and a shock to confidence at the same time. So these are low probability events in the context of Brexit.
Now moving on, OPEC members and other oil-producing countries convene in Vienna this week to discuss lowering their output. At the recent G20 meeting in Buenos Aires, Russian President Vladimir Putin and Saudi Arabia's Crown Prince Mohammed bin Salman said they were renewing a pact to cap output next year. But ministers from the two oil-producing giants and their partners will have their work cut out for them if they hope to strike a deal at the plenary sessions on Thursday and Friday and to restore their market credibility. OPEC meeting members convene in Vienna to discuss, of course, lowering their output. Let's move on now. Stardom is easier to come by in the internet age, but maintaining that fame can take a serious toll. As CGTN's Phil Lavelle explains, the fight to stay relevant on YouTube is leaving many disillusioned with the computer code running the platform.
Lots of people head to Hollywood in search of stardom. Others don't need to anymore. And that is partly thanks to services like YouTube. See, these days, anybody can be a filmmaker. All they need is a cell phone with a camera on the back. Pretty simple, but for some, that commitment to filmmaking is leading to its own pressures.
I need some
10 billion views, 20 million followers, but feeling burned out, he had to give it up for a while recently.
I've been doing this for 5 years, and that's 5 years of non-stop. I've been doing 2 videos every single day, the exact same time every day for 5 years. And I've very, very rarely missed an upload.
Part of the issue here is being seen. It's being visible, especially when you consider that some people make their livings through this service. YouTube says its users upload some 400 hours of content every single minute, and it has complex algorithms that decide who sees what on whose feeds. Many don't understand how they work, so they feel compelled to keep producing all the time just to try to beat them. Back in April, a woman shot 3 YouTube employees and killed herself. She was angered about YouTube's practices and policies. This was, of course, an extreme case, but it shows that some are feeling the pressure more than others.
Eventually these entrepreneurs have nowhere to turn and they develop learned helplessness, sort of this out of control feeling where if they stop, they're going to lose their popularity in their business. So they need to make a commitment to get outside, to interact face to face with the people that they love, because all of that interaction that they have is online. And we know that when people are exposed to that, but no real interactions, it really impacts their mental health.
And so for those in search of online fame, it is an easy way to start. But keeping up, that is the hard part. Phil Lavelle, CGTN, Los Angeles.
And moving on now, here's a look at how commodities performed today. Oil prices fell, swept lower by a broad decline across financial markets as we saw concern about the outlook for global growth and evidence of yet more crude supply in the market, wiping out half of this week's gains. Meanwhile, gold prices also dipping today, retreating from a more than 5-week high in the previous session, as of course the dollar crawled higher today. Let's take a short break now, still coming up. Nigerian innovators unveil what they say is Africa's ideal vehicle.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
Now, 2 Nigerian entrepreneurs are improving the country's automobile industry. Dakpo Akintunde and Azuka Ijekeye have unveiled a prototype design of the Africa Ideal vehicle. The car is designed to accommodate 6 to 9 passengers, which could boost plans of the Nigerian government to promote locally made content. Now, here are both men speaking about their prototype car.
My name is Dakpo Akintunde, and I'm a registered architect and a car designer.
My name is Azuka Ijekeye. I've been described in so many ways. I've been called an entrepreneur, an industrialist, a businessman. Maybe an industrialist comes closest, but I see myself as a project manager who brings together all the factors of production to get products to solve our problems.
The Vixie AIV was a response to a need that I studied in school. Yeah? When I was doing my car design degree, my focus was to make cars in Nigeria. How are car designs possible in a place like Nigeria? How can we do it, you know? In Japan, they have all sorts of industries. In China, they borrowed industries from Japan. Germans have a culture of metal craft. So, coming to Nigeria, I have to start to ask the question, how are you going to make cars in Nigeria different? Yeah? So Ivixi is a response to that. Ivixi AIV, this car here, is a response to that.
Since design came into the factory, the entire ethos of the factory, the entire working system of the factory has changed. As you can see, the AIV, the Africa ID vehicle, is like nothing Nigeria has seen. Because the level of thinking of it is so high. But if that thinking was not tied to the production systems available locally, it wouldn't have come to pass. We got involved by him agreeing to bring his thinking and plug it into the production system that we already have.
This car is going to be very successful in warm countries. The same way those cars from Europe are not so successful in these warm countries. All our dashboards are melting. This car, the dashboard will not melt. Do you get my point? After a while, the car from abroad degenerates from the inside. You know, even if you keep getting your local panel beater to make the outside look good, the interior degenerates, you know. This interior will never degenerate. So it's a car 100% specifically custom built for our culture.
How do I see the Ivixi AIV? It is the solution that everybody has been waiting for, but they didn't know they were waiting for.
We're going to be deriving componentry. Do you understand, eh? From scrap yards and stuff like that. Yeah, but in 3 months, we'll be having a moving prototype.
The AIV and all the accessory industries it will draw, all the competencies it will bring together, will help Nigeria go a long way.
Now, French fashion house Chanel took over New York City's Metropolitan Museum of Art to debut its new pre-fall Métiers d'Art collection on Tuesday. Now, before we go, let's dazzle you with Chanel's latest designs.